Hello and welcome to TA for Traders. I'm Nigel Croft. Today's Wednesday the 7th of June. We're one day before the general election in the UK, so let's have a look at the charts of sterling. What we'll see is that the pound against the dollar has gone virtually flat, hit the 130, come back to 129 and been flat for the last week. What we'll also see on the weekly is a potential reverse head and shoulders, and on the 4-hour chart we'll see that it's moved above the moving averages, and on the short term could be ready for a short term break. So here we have sterling on a daily basis, so each candle represents 1 day's trade, and what you can see, it's been very steady over the election period. There was the wobble on the 26th of May. That was when the Labour Party did a lot better in the polls than expected, and that hit sterling. But since then it's been a steady progress upwards. The outcome of the election's obviously important. Over the last week, actually, if it is a hung parliament, it's now not seen as negative for the pound as it was perhaps 2 or 3 weeks ago, in that if it's a hung parliament, more chances of a softer Brexit, which may be more beneficial, who knows. But looking at this chart, you can see that we're back up to the 20-day moving average. That is moving sideways. You can see that we've had support from the rising 50-day moving average, so that's all boding positive. There is resistance levels, as we can see, just above the 130 level. On the momentum, you can see that the RSI has ticked up. It's above 50, presently at 54.83, so that's showing positive momentum. And you can just see that the MACD are just about to cross, which is a positive sign for momentum as well. On the weekly chart, here we're starting to get a picture of reverse head and shoulders. You've got the left shoulder here from trading in July through to September last year. Then we've got an elongated head, and we're now getting this right hand shoulder. That would be, if it breaks to the upside, would be a positive picture and would actually see the market move up to, if it's broken and it's confirmed, up to the resistance in the 140, 145 area, but that's a long way down the road at the moment. Other factors on this weekly, here the 50-week moving average is moving down as a negative influence, but the 20-week is moving up as a positive. RSI, again, it's above 50. Starting to lose a bit of its upside momentum, but it's above 50, 55.91, and the MACD are still positive. On the short term, each candle here represents 4 hours trade. You can see that today we've just moved back above the 200 4-hour moving average and above the 24-hour moving average. They're both moving upwards. We're about to get the 20 cross the 200 in a bullish fashion, which would be good. The 50-day still moving down, but it is starting to stabilize. And here the RSI again 56.65, bubbling along, not in an uptrend, but is positive. And the MACD both moving upwards above zero, which is good as well. Here you could actually draw a downtrend, which I will do, through these highs there, or even through that one there. You can see that downtrend that's in place. If we break above there, that would be positive, especially if we go above that 1295 resistance point. That would confirm the break of the downtrend and this medium-term downtrend on the 4-hour, and would see the resistances at the 130 and above being tested again. And really, looking at the charts, that would be the analysis I would take into the election, that it's more likely to break to the upside than the downside at the moment. Looking at the support resistance levels, these are from the daily. We've got resistance at 130 spot 426, 131 spot 211, with supports at the 50-day 127.92, and then marginally below there 127.69. So that's been TA for traders, having a look at the pound against the dollar one day before the UK election. To me, it looks like there's more chance of a break to the upside than the downside, but let's see what happens over the election. Thanks for watching this video. The video was for educational purposes only and is not an investment recommendation anyway, and the opinions are just my own. To that effect, please do read the disclaimer. Thank you.